Now, today's video is all about market abuse. But in order to understand market abuse, I need to sidetrack very slightly and very quickly. Fear not, this is not a law degree, but it will give you an understanding of why the FSA are chasing down so many people at the moment for this strange thing called market abuse, which hasn't been around that long. Right, here comes the sidetrack. You need to understand the basic difference, only the basic difference for this video, between criminal and civil law. Two branches of law in the UK. I'm going to keep this brief, okay? If you commit a crime, you go to prison. If you commit a civil offence, you get sued for money, basically. Okay, practical example. You go into a restaurant, enjoy the meal, but you don't enjoy it as much as the price on the menu suggests. So you say to the manager, I'm going to offer you 3/4 of the bill in payment. And he says, you can't do that because I'll call the police if you don't pay the full bill. At that point, you can offer him your mobile phone and say, here, try it using mine. Okay, not paying a restaurant bill is not a crime. The police won't be that interested. However, it could be a civil offence, so the restaurateur could sue you to get the difference between what you offer to pay and the value of the meal. All right? Or take O.J. Simpson. Okay, remember him? He was not successfully prosecuted under US criminal law for murder/manslaughter in the first instance, but he was sued successfully by victims, okay, relatives who argued that they wanted damages, and they were successful in the US courts in the separate civil case. Okay, so my point is you have crimes and you have civil offences, and the two are basically separate. And there's one other key difference. It's much harder, okay, to prove someone's committed a crime, because the end result is prison, than it is to establish that you should be able to sue them for money. Okay, the tests are different. A jury in a criminal case has to be persuaded beyond reasonable doubt that you did it. In a civil case, they lower the bar. Still could be a jury involved, but the test is on a balance of probabilities. Right? So just remember that. There are two types of law in this country, criminal and civil, and the test for a civil case is much lower. Right, here's the point. Okay, you may be wondering when I'm going to get to it. Here's the point. The FSA are going after people at the moment for crimes. There are two financial crimes. One is called insider dealing. I deal with that in another video, but it's effectively using price-sensitive information that's not publicly available to make a quick buck. Okay, if you're in a privileged position to have that information, that's actually illegal. It's not a perk of being in a city job. Okay, then there's misleading markets, another crime. So there'd be a jury involved, and the FSA would have to get them beyond reasonable doubt. That is, well, it can be a number of things, but an example was two directors of a company tried to list in London. They totally misled the AIM market about the turnover of the company that they were trying to raise money for, and those directors got prison sentences for doing that, misleading investors. Okay, so those are crimes, right? Now, you might say, well, that's fine. FSA, off you go. Regulators, go and chase people down for those two crimes, and that's fine. Why do we need market abuse? Here's the answer. If you want to prosecute someone for a crime in this country, a financial crime, it's going to take a long time, it's going to be expensive, there'll be big defences, it'll be public, and it's embarrassing for the regulator if they fail. So, what if they are worried about some dodgy behaviour in the city, they want to nail someone for it, but for whatever reason they don't want to launch a full criminal investigation with a jury that's got to be persuaded beyond reasonable doubt? Enter market abuse. Essentially, market abuse allows the FSA to go after you for dodgy stuff without having to go beyond reasonable doubt in a criminal case. They use the civil test instead. Did you, on a balance of probabilities, do something dodgy? And we'll look at what those three dodgy things might be in just a moment. So you see, it's quite clever. There's a market abuse directive. It's been around since 2005. A lot of people don't realise the impact. It allows the FSA to sort of bypass the criminal procedure, which can be a bit clumsy and a bit slow and so on, and still go after you a little bit quicker. Now, because they're treating market abuse as a civil offence, the penalties are correspondingly lower. You don't end up in prison for market abuse, but you can be fined, and people are being at the moment, and you can get a lot of embarrassing publicity generated, which is almost worse. You'll find as soon as people are accused of market abuse, they tend to leave their jobs because frankly their employers don't want them hanging around with all that sort of stuff going on around the edges. All right, so you're not going to go to prison for market abuse, but the FSA can make your life pretty damn difficult and expensive. So what is it? All right, well, the 3 M's, I call it. There are basically 3 things you can be nailed for doing that are called market abuse, under this sort of umbrella term, market abuse. 1, misuse of information. There's the first M. What would that be? Well, in the city there's a term called wall crossing, all right? And that is the idea that if you're in a position where you're advising on lots of deals before they go public, for example, you have information that is incredibly useful to investors if they could get hold of that information before it's made public at, say, the London Stock Exchange. And you're not supposed to divulge that information. As a corporate deal advisor, you're not supposed to just slip a quick call in, okay, to one of the parties to a deal ahead of the deal, giving them useful information that might enable them to make a quick buck when the share price jumps when that information is released. An example could be, some oil discoveries in a target firm that's about to be bought. You know that, very few other people do, you're supposed to keep that to yourself, okay? And it's called wall crossing because effectively by divulging that information to anyone, your wife, a friend, a partner, a broker, you are crossing the Chinese wall that's supposed to exist between you and those people, all right? So you're breaching client confidentiality rules, if you like. So there's the first M, misuse of information. Number 2, misleading investors, making promises of guaranteed returns, false promises. I can think of an example. One firm claimed on an advert to be number 2 in its sector. There were only 2 firms in the sector, okay? So the FSA can take offence. There's no prescriptive list here, and anything that looks like it might be misleading investors. Here's another example. You're an analyst, an investment analyst, okay? You put out a tip on a firm. You say it's a buy, okay? Lots of people follow your tip sheet and they buy. And then the stock collapses. Market abuse? No, not yet, because you gave that opinion in good faith. It's not market abuse, okay? But if immediately you gave the tip, you scribbled a file note to a colleague saying, by the way, that tip was a load of crap, okay, has been known, now you haven't given your tip in good faith. And if the FSA find that file note, you could be nailed as a minimum for market abuse. So you get the idea, okay, it's dodgy behaviour. You're not going to necessarily go to prison. They're going to launch a court case for that, but you could still be in trouble. And the third M, so misuse of information, gave wall crossing as one example, misleading investors, a couple of examples there, manipulating markets. There's a third M, manipulating markets. So for example, if you're in a very quiet part of the market and you want to stimulate a bit of interest and get, sort of mugs to come into the market thinking, oh, there's activity here, there's liquidity. Maybe you and a mate do wash trades. Okay, maybe you work for different firms. You just do a series of 0 profit and loss trades so that the liquidity reports at the end of the day make it look like your market is active when in fact it's not. Or you stick fictitious orders into the London Stock Exchange order book to try and manipulate the price. You put them in, cancel them. No intention of trading at those prices. You're just trying to fool people into thinking that you will. Okay? Again, can't be prescriptive, but that kind of behaviour, and you might be thinking, well, that's how I normally earn my bonus. All right, well, be careful, because that is the kind of stuff the FSA wants to stamp out. All right? And a lot of people are getting caught out at the moment because they're thinking, well, this is stuff we've always done, probably. Well, if you are thinking that, then I suggest you go to the FSA website and have a look at their stuff on market abuse. Now, final couple of points, all right? The FSA have been quite sneaky, okay? They use the market abuse regime in the context of what they call principle-based regulation. That sounds ghastly, and you may have just turned off the video at that point, but hang on in there, all right? Because what this enables the FSA to do is they have a list of 11 principles, and they're really waffly. I'll give you 3 of them. Number 1, you, market participants, must behave with integrity. What does that mean? That's all it says. Okay. Number 5 out of 11. The FSA expects you to follow the highest standards of market conduct in your part of the market. Deliberately vague sentence, deliberately. Number 8, avoid conflicts of interest. Okay. And those principles, the FSA can simply cite as examples of where things have gone wrong. They can say, you did not behave with sufficient integrity, you did not act following market conduct, you have created conflicts of interest. Right? And they don't have to go any further with the market abuse regime. They don't have to point to a little nitty-gritty rule, because what they don't want is people getting off on technicalities. All right? In other words, their approach is, if it smells like a dog, it looks like a dog, and it sounds like a dog, it's probably not a cat with an identity crisis, if you see what I mean. If something looks, smells, and feels dodgy, All right, the FSA want to be able to say, you and I know this is dodgy. We want to stamp that out. We're not going to bang you up because frankly, we're not sure we're that confident to go through the process, the criminal law process, but we do want to make a fool of you in public and we do want to fine you. And hopefully that'll stop you and your mates from ever doing it again.